Times are hard? The currency is inflating? The economy is down? Worried about your money? The solution? Gold. But did you know that buying gold bars is not the only solution to investing in gold, but you can buy gold shares? How? Hello, I am Rashad, the presenter of your program Hit the Road to Fire, in which we talk about the stories of companies and investing in the stock market. As you know, gold has a long history, and we used to use it as an old currency, and with time, we used it as a value preserver, meaning as an investment. Indeed, with crises, we find that the price of gold has risen, and in general gold is always on the rise and is safe if we ignore inflation. There is a good segment of portfolio managers who have started to invest in gold, especially during this crisis and during the corona crisis, and the most successful investor months Ray Dalio, who invested about $400 million in gold during the second quarter of 2020. But as we have already mentioned, dear viewer, investing in gold bullion is not the only way, but it is possible to invest through gold mining companies. I mean stocks. But each method has its advantages. Let's analyze each of them. To understand the difference between them, it is necessary to know the difference between productive assets and non-productive assets. Productive assets are the assets that bring you a cash flow, or profits, a farm you buy and sell fruits, or a house you buy and get rent, a share you buy and you get profits. Subscribe and hit the road to fire and get scientific benefit. While non-productive assets do not generate a financial flow exactly like the topic of this episode, gold, meaning 100 grams today is 100 grams after 100 years, it will not generate small pieces of gold. But investing in shares of gold companies is considered a productive asset because you own the stock as if you are a partial owner of the company. I mean, the company makes profits and distributes them to investors, as you know, so this is a productive asset. Let's take the example of the shares of these gold mining companies, which we note that their profits rise with the rise in gold prices, and with it their shares rose. Enough, we understood. What is better, tell us to buy bullion or gold stocks? Dear viewer, I will explain both of them, and the ball in your court, you decide. Let's start with our beloved Warren Buffett and his partner Charlie Munger. They are both against buying gold, and they are generally against buying unconstructive stocks, whether it is gold or Bitcoin and other digital currencies. Why? Because non-productive assets, as their name says, do not have a real value because they do not produce, so their value comes only from supply and demand. I mean, if people agree that something has a really high value, you will find that the demand has risen and the price as well, as happened with Bitcoin and others. While the productive assets, the farm, the real estate, and the stocks that Warren preferred, produce things that had value to sell and get profits from them, whether by increasing the value of the stock or by distributing profits to investors. Let me add that the price of gold may seem stable and constantly rising, but if we take inflation into account, we will see a completely different picture. On the other hand, think about what money is after all. Just a piece of paper that has no real value, yet you find everyone fighting over it, because although it is not a productive asset, there is a general agreement and trust in it. Therefore, investing in non-productive assets such as gold may be a good investment, and this is logical. In addition, the currency itself is going through a stage of great inflation due to the many printing during the crisis, which reduces the value of the currency, meaning it reduces the value of your wealth, so it is reasonable to invest in gold as a hedge. Indeed, one of the major investors, who manages $154 million, says that gold in particular in these moments is an important investment, although in the long run it is not an excellent investment, but it is definitely better than cash. Dalio insists that Buffett is wrong because he did not invest in gold. The question of what is better to invest in gold bullion or stocks remains an open one. To reach the conclusion, we must compare gold itself and the shares of gold companies at the beginning of the 21st century, where we notice an increase of 550% in the price of gold, while the shares of gold companies rose by 460%. So it ended up investing in gold bars for sure. Beautiful, true? No, that is wrong, dear viewer, because these companies not only increased their shares by 460% on average, but also distributed profits to investors. As we know, distributing profits can be a successful strategy and achieve a higher return for you, as happened with Warren Buffett with Coca-Cola shares when he played it right. In all cases, whether you invested in gold itself or in gold mining stocks, you are making a stable and relatively safe investment, unlike volatile investments such as investing in disruptive technologies and digital currencies, which are true to be high risk, but the profit is higher. In the end, I want to hear your opinion. Do you prefer investing in gold, or companies and gold stocks, or other companies, and you reject this issue of gold from the ground up? Write me your opinion in the comments, and if you liked the episode, do not forget to subscribe, like and share with your family and friends. See you soon.